Hello everyone, welcome. I'm Mike and this is IPO Market Watch, the channel that covers all initial public offerings plus all the stocks trading on the stock market, as I have a goal and intent to hopefully cover every single stock there is in the market, whether it sucks or not. But in this video, you're lucky because I'm going to cover something that I think is a really good stock and is one that I am interested, personally speaking, in buying 100 shares of this stock. Now, before I continue though, let me show you some of the other things that I have talked about and done so far and where we're at with those. In June, guys, June 12th of 2023, I talked about NASDAQ in my Discord and I told the Discord members that I would buy ticker symbol NDAQ at $51.33. It's now at 55, so we're up and we're doing really well. Why do I think the NASDAQ is a great stock to invest in? I'm not going to get into full details of why, but guys, I mean, think about it. It's NASDAQ, right? Some things are just, I'm not afraid to invest in. If you get into the right entry price, I just don't fear holding on to them. So that's one. The other stock, guys, was ticker symbol GEN. I did that on YouTube here. I did not do it for Discord. It was strictly for YouTube members. Everybody can watch it. It was public for everyone to see. Ticker symbol GEN, Gen Digital Incorporation, at 1748. I said that I would buy. It's now at 21.19. So here is my return so far. I'm plus 380 bucks on 100 shares at 1739. So that's pretty awesome, right? Let's get to the stock now that I think is awesome. It is not a stock that I talked about on my Discord. It's a stock that I am going to show for the first time here on YouTube. I believe that I can get 100 shares in this stock and that I will do very well within the next 6 months. Universal Insurance Holding Corporation, together with its subsidiaries, operates as an integrated insurance holding company in the United States. It develops, markets, and underwrites insurance products for personal residential insurance, such as homeowners, renters, tenants, condo unit owners, dwelling, fire, and others allied lines, coverage for other structures, personal property, and much more. So like I said, the company is called Universal Insurance Holding Corporation, ticker symbol UVE. As I am recording the video and have made the slides, the stock is at 1653. The video, you will see it a few days or a day or 2 days later after I make this, after I record it, I'm sorry. So obviously the price will be different. I'm thinking it's going to be slightly higher than what I'm recording it right now, but that's okay. So 1653, what I like about this is one that stands out right away, PE ratio of 7.06. And that's very healthy. So right off the bat, I can say, okay, let me look further into this. I want to mention something though, whether or not this stock is a good investment or not depends on your individual tolerance, risk tolerance, your individual goals. That's something else, to be honest, your goals and the type of strategy you have going forward. There are obviously many positive factors about this stock that makes it very attractive to me. And I'm going to show you right away what they are. So the positive factors. UVE is a well-established insurance company with a strong track record of profitability. The company has been in business for over 60 years and has a history of generating consistent underwriting profits. It also has a strong balance sheet with a low debt to equity ratio. This means that the company is financially healthy and has the ability to withstand economic downturns. This is a value stock and it has a PB ratio of 1.28, which is well below the average of 1.38 within its sector. If we look at the company's financial performance overall, real quick, since 2016, you can see that the revenue has been growing every year, right? So we can see that right away, right here. Revenue, the blue bars, growing consistently every year. And the earnings have been positive all the way up until 2021, with 2022 being the only year where they had negative earnings, but that's okay. In 2023, we have margins showing significant improvement with GAAP operating loss margin at 1.7% compared to 29.3%, which was the prior year. So that's another reason why we're looking at, the prior year also, the PE ratio was at 70. And now it's at 7.06. The company has become a deeply discounted, undervalued stock right now. Here's a map of the United States, and you can see the green where they are doing business and the light green where they are licensed. It also includes Hawaii, leading holding company of personal residential homeowners insurance and services. The 5-year average return on common equity is about 7% positive. They had about $1.85 billion for the year 2022 in direct premium written. They have 19 states that they are actively doing business, greater than 800,000 customer policies managed. If we also pay attention, guys, to the total debt, this company has a very nice low debt and well managed. Let's not forget that the market cap of this company currently stands at $482 million, and that compares very nicely to a total debt of just $102 million. However, though, the insurance business is highly regulated and sometimes also cyclical. So take that into consideration when you're wondering why in the world this stock has just never taken off and exploded like crazy. If you want any stock that will explode within a year or two, then you might want to look at the tech sector. But this is also a great company in the fact that if you can get into a value stock such as this one at the right price, like Warren Buffett says, you buy a value stock at the right price, you're guaranteeing yourself to make money. So sometimes, you know, when we want to have a diversified portfolio, we also want to include value stocks, and we want to include them when we can get in at the right price. Another way to summarize this is by factors, positive and negative. So the factor, financial performance, the positive part of financial performance is that they have a strong record profitability. The negative is that they are in a cyclical profitability. The financial health, strong balance sheet with very low debt, highly regulated industry is the negative part. If we look at the valuation, it is a value stock with a low PB ratio and a low PE ratio, really undervalued this year in 2023. The negative part, it is in a very competitive industry. And the analyst ratings, when we look at the Zacks, is number 2 and it is a buy. In fact, analysts give this a price target of 21, something that I would not so much agree with, to be honest. I would be very happy to get in at 16.53 and sell at 19 US dollars. I think that that is very possible within the next 6 months. Of course, this is just my opinion. Don't trade according to my opinion, guys. But for me, at 16.53, this is a great entry. 100 shares and sell them at 19 bucks. If it hits 19, I can also set up a stop loss, right? And then let it go and see if we can go higher. And if it goes higher, then I'll raise my stop loss again and let it go higher, right? So we can do it that way also. This is just my opinion. Let me know in the comment section below what you think. I think that this is awesome. I'm going to keep track of this, and I'm going to present to you guys on a monthly basis what my 100 share investment in this is doing, where is it at next month, and so on. So that way you are able to see what goes on with things I talk about on my YouTube channel and how they perform later. I wish you guys all the best and take care.